Hello, welcome to another talk on money, business, and investing. My name is Jose. I'm the founder of the company brand here at Master Investor. Ensure to subscribe and follow us on all other social media platforms. Turn on the notifications so that you know when we go live or upload a valuable talk that will change our lives financially forever, as long as we apply the data into our lives. That's how we turn information into knowledge. We are going to acquire knowledge, but we need to turn that into knowledge for ourselves. Okay, just acquiring the information or the knowledge from somebody else doesn't mean we have done all the work. We have to apply that. Okay, make sure that we take a massive action, because it's not about only consuming, it's about turning around and producing something, and ultimately producing passive income, because we are controlling assets that are constantly giving us income in the form of passive income and sometimes capital gains income. Those are the two types of income that comes from investing. Today, we're going to go over what is financial independence. Yesterday, we talked about what is true financial freedom and how to obtain that. And today, we're going to emphasize more on that subject, because at the end of the day, financial independence is a step towards financial freedom. However, we cannot just stop at that point when we are financially independent. The formula to achieve financial independence and freedom will be discussed today. What is financial independence today? Summary: start building a financial foundation with financial education. Master what it takes to reach financial independence and how to build freedom. We must sacrifice things in our lives to achieve our financial goals. We must always begin with our vocabulary, because words are the most powerful tools humans have ever created. Learning the language and mindset of the ultra-wealthy is critical for one to build financial independence and freedom. For example, instead of saying, "we can't afford that," we should reframe that question with the wealthy mindset. Then it would be, "how can we afford that?" At the end of our lives, we can leave a big cash flowing business empire and a lot of wealth to the world and those people that we want to impact that are close to us. If you have a family, kids, and so forth, we want to always provide something that can empower them and the rest of the world. We don't just want to leave this earth without impacting or reaching our full potential, which a lot of people end up not reaching their full potential due to the lack of money. They have one problem: lack of money, and it's due to the lack of financial education and working for earned income their entire life, not knowing that they could also build passive income and capital gains income. But their job took a lot of their time, and therefore they didn't know how to multiply money successfully like the wealthy do. We can be financially independent, and so are loved ones, when we concentrate in the assets column. Yesterday, we had an article, and we discussed where we talked about financial freedom, which is not financial independence, but it is a step towards financial freedom. Financial independence comes before financial freedom. Many people have money, but they are not free. We have to ensure that we are building our asset column with real assets that produce passive income and capital gains income to us today. And those assets are being controlled by the companies that we own. So we will have to operate with a company. Otherwise, we cannot really call ourselves businessmen or business, if you're a woman, right? Business people. And we need to receive passive income in order to be an inside investor, in order to say, hey, we are wealthy entrepreneurs. We do not work for earned income. We have passive income and capital gains income coming from the assets that our companies control. And therefore, we have financial independence, and we are building on freedom, because in order to be totally free, we need to compound that assets column with more assets that produces more passive income, which exceeds the amount of our living costs per month. Therefore, we have enough positive cash flow that we can use to manifest what we want in our lives. So we need to have excess of cash flow coming in order to achieve financial freedom. Once we reach financial independence, that's the first step, because now we don't have to work for earned income. We don't have to sell our time. We don't have to work at a job a day in our lives, because we have passive income and capital gains income covering for those living expenses. However, we need to continue to compound the assets column, like I mentioned, because that's how we're going to improve our positive cash flow. If what we call an asset does not produce passive income or capital gains income, then it is not an asset yet. A lot of people have that big misunderstanding on how to tell whether something is an asset or a real liability. They often call assets what are liabilities, and it's because they don't understand how to read financial statements. Knowing the difference between an asset and liability is essential to build freedom. Our return on investment should always be determined by reading the financial statements and not based on opinions. As a young person, we can wish to be wealthy and financially independent. There were many things we love and appreciate about being wealthy, entrepreneur and inside investor, thriving in life on the right side of the cash flow circle. It comes with rewards when we are building a business that is solving a problem in the world. That's why we say the more generous we are, the wealthier we become, because the more problems we solve for people, the more people uses our products because they have that problem and they are asking for that product. They're looking for somebody to solve that problem to them. So if we have 1 million people with that problem and we solve that, then we should have the reward, which is constant passive income coming in to our lives and giving us total freedom so that we can impact the world in another way. Maybe we want to build another business to do something else totally different than what that business is doing. And that's the freedom that we're talking about. It's not just the money itself. We need to go beyond the money and understand how to build the assets column with real assets that are producing passive income. So our priority is to invest for passive income. Rule number 1 in our community here at Master Investors is that we work to build passive income and make money work hard through sound investing. And our mission is to elevate the financial well-being of humanity through high-quality financial education. Made simple, we look at opportunities to build passive income and true wealth. It takes repetition to really build wealth. A lot of people give up on building financial independence because the formulas of wealth are often dull, mechanical, and boring. Although we have more technology today than ever before, which makes it a little more fun and a lot faster to tap into passive income. We can literally start making passive income and capital gains income within 24 hours because of the systems that are available to all of us via the internet. We must choose which mindset we should operate with in life. 2 types of mindset when it comes to money: poor mindset versus wealthy mindset. What precisely is financial independence then? So the issue is raised. What exactly is financial independence? Is a high-paying job necessary for self-sufficiency? Does it stem from an expected inheritance or perhaps spousal support? It really means I'm going to work until I'm 65 and then I'm going to retire for a lot of people. Sadly, these are inadequate definitions. A well-paying job is something we could lose. Furthermore, awaiting retirement and inheritance or alimony, basically living in the assumption that someone else will provide for us, won't assist us in defining financial independence, and we should not go that route when building wealth, relying on other people. We need to understand how to build our assets column and start small if you need to, but get started building the assets column. Okay, investing comes with risk, but the more financial education we have, the better calculated risk we can take, the more we can tolerate because we understand the investment. We understand how the asset class works. And we have everything measured through facts, not opinions, because we are able to read the financial statements and understand whether that is truly an asset or liability. Then savings must equal financial freedom, correct? And a lot of people think like that, but it's not. Savings is losing money in today's economy. Why? Because today money is created with debt. It's not longer real money. It's not backed up by gold. A common misconception is that conserving or saving money is the first step towards financial independence. This is because from an early age, the majority of so-called experts instill this in children. They come across it everywhere in the literature they read on money management at school, from parents, etc. Preserve our money or save our money. $1 million is often considered the magic savings amount. it is a good round number as far as they go. Furthermore, $1 million is far more money than most people have. However, it is also changed from before, and being financially independent for the rest of our life is probably not enough. And even if we could live off of 1 million for the rest of our life, there is a gloomy mindset about how to get there and make ends meet. Sacrifice money to achieve financial independence. We once came onto an article about Carl and Mindy, a couple who determined one day when they woke up that they will save 1 million in 4 years. They felt strongly about why they should do this. On a podcast episode, computer program Carl 42 confided in Farnoosh Torabi he was having this horrific day at work. At 38 years old, he thought there was no way he could accomplish that task until he reached the typical retirement age of 65 or 62. Many people feel stuck in their careers and take no action to change it. Well done for moving forward. When we feel stuck, we have to take action. We have to change our environment, right? So if your dream life is to be in a certain city, don't wait until tomorrow to do it. Start packing right now. Even if you don't have the means to get there by packing, you're creating the means, and the universe will start listening to you and aligning you with the people and the opportunities to make the move. But we have to put things in action. It's very important. Ultimately, though, it is still an act of a financially poor mindset person's attitude. By thinking saving $1 million in 4 years will solve their financial problems and will take care of their retirement for the rest of their life. That is the poor mindset, because remember, savings are losers, debtors are winners, and spenders are winners. The ones that learn how to spend money and debt wisely to invest for passive income, those are the winners. We are building wealth with all the people's money, OPM with the savers' money. The banks are in the business of lending money, not saving money. So when the bank gets all the savers and their money, they turn around and lend that money to people like us, wealthy entrepreneurs and inside investors. Money must move from cash flow and asset to another cash flow and asset in order for it to maintain its value. Otherwise, it goes back to its intrinsic value, which is zero. It has lost about 95% of its value since the separation from the gold standard back in 1971, August 15, done by President Nixon. However, the pair examined their spending patterns first. Carl says on their blog, his wife and him wrote all of their expenses in a book. They logged every time they came back from shopping or paid a bill. They calculated that they could subsist on $24,000 annually based on the records. They increased that estimate to $30,000 a year and included a $6,000 cushion just to be cautious. They came to the conclusion that in order to retire by the age of 42, they would need to save $1 million, which is the poor mindset. Saving is losing money in today's economy. So instead of saving, they should worry about investing. They should pay attention to investing and put all the efforts on investing, because after 4 or however many years they gave themselves, they would already made more than $1 million. Because, and not just one time, over and over again for the rest of their life, as long as they're building real assets and acquiring existing businesses that are cash flowing. They followed the classic savers guided book to attain this. They reduced spending, worked side jobs, invested in their own home, and bought stocks. Basically, everything that they did is the opposite of a wealthy mindset. Although Carl and Mindy's retirement was wonderful, having $1 million in the bank is undoubtedly better than most. But we don't think their retirement plan is future-proof. They applied the so-called 4% rule, which just says they won't run out of money provided they withdraw 4% annually from the retirement account. Given their youth, perhaps this makes sense for them right now. What will happen, though, when they become older and need more care? What happens, for example, if their property taxes increase dramatically over the following 20 years? What happens, for example, if inflation keeps rising its current rate of 2% per year for the next 40 to 50 years? What if, after all, they grow up wary of leading such a frugal life? They simply cannot make ends meet without a sizable wage. Even while they are currently content with their $30,000 annually salary, it will not last them through retirement. Today, the only way to beat inflation and down economies is by preparing through sound investing. If not, how much money it is not how much money we make, but rather how much money we keep and how much money we get to multiply in more sound investing. So it's not, a lot of people make money through their jobs and they're like, oh, they made this XYZ amount of money. But at the end of the day, taking their taxes out is probably a half of the number that they're telling us. And so they already got most of their money taken away, and the rest of the money that they kept was all for expenses and their liabilities, leaving them with zero money. So it's not how much money we make, but how much money we keep and make multiply through sound investing. Majority of people will work their entire life for earned income and avoiding active investing because of fear, as they lack financial education. Anyone who lacks data about a certain area will be controlled by fear. The best thing we can all do is to invest in financial education daily. As we can see on the diagram, the cash flow pattern of the poor class, if you're watching this on our YouTube channel, because we're doing a live stream and our podcast right now. So if you're listening to the podcast, make sure you go to our live stream on YouTube and find the video if you want to look at the diagrams. And you can also subscribe to our newsletter. It's free. Go to our website and you'll have each and every single article that we publish delivered to your email. If you can't get to the podcast or the live stream, then we at least have time to read a little bit before going to sleep or in the morning, so that we are increasing our financial IQ, which is important to build wealth. We need to go to sleep a little smarter than we were yesterday, because it shows improvement. It shows us that we are moving towards bigger things, bigger goals. We are understanding how to build our financial empire because we have financial education coming into us daily. Majority of people will work their entire life for earned income and avoiding active investing because of fear. And that's a big issue. Anyone who lacks data about a certain area will be controlled by fear. The best thing we can do is to get educated. So as you can see on the cash flow pattern of the poor class, you have the person has a job, right? And they work for earned income, or also known as ordinary income or active income. They have no assets, and usually they have no credit to acquire liabilities. So the poor class usually just works to pay all of their expenses, and money flows out of their pocket to someone else's asset column or company's asset column. An actual assessment of financial autonomy. Taking out a piece of paper and making two columns is a very easy test to see if we are financially independent. Even if a person has a high salary or sizable amount of funds, enter the monthly income we earn in the left column. List all of our monthly expenses in the right column. Now put our palm over the left column and act as though we are not earning that money anymore. What is our impression of the column on the right? If the person currently experiencing a mild panic attack, if they are like most individuals that lack financial education, that have no assets, therefore, if they don't have income coming in from their job, then they panic. They cannot pay the expenses that they are having right now. Therefore, they have to continue to work. It's called the rat race, right? They may love what they do, but they have not taken control over their financial statement. They're still working to pay all of those bills. They should be working to build passive income and capital gains income, so all of the bills are paid for by the business revenues that we are controlling with our investments. Instead of working hard all the time, physically trading time for money, the person should invest time in financial education and building the assets column, because that's the way to not only retire wealthy in abundance and be able to experience life at the highest level. Money is an important element. It's one of the key elements of having a successful life. If we don't master money, then there's a big issue. You're going to suffer not only financially, but in every aspect of life. Money is literally a multiplier. We need to use it to manifest what we want and multiply everything that we want to impact and create a ripple effect in life. Wealth is not measured with money alone. As we can see, money only does not make one wealthy, but it is the cash flow and assets that we control with our companies that determines our wealth number based on our standard of living. This is still valid if we are a low income person, for taking out of our savings is not the same as making money through investing. All the person is doing is dragging down their assets. Furthermore, it is really terrible financial mindset that views the world as scarce rather than abundant. Remember, having the wealthy context is key. In other words, having the proper beliefs, values, philosophies, and understanding of how money works today. Consider the post 30 easy money hacks to get a little richer every single day this month that we read a while back from a different blog, which in our opinion is a horrible article with the wrong mindset, building wealth, right? Because they're teaching supposedly their audience how to build wealth, but they're giving the wrong data. So people that do that, they're going to find themselves struggling financially. And some people will follow that to the T. And it's not creating true wealth, it's creating literally poverty for them. It's not giving them freedom. Whoever is listening to that and thinking they will become rich, they will be confronted with the reality that such is not the way to create financial independence and freedom. Among the actions detailed in such article, there are items such as purchase generic, verify their eligibility for a health savings account, check their 401k expenses, cultivate their own herbs, make a weekly $10 IRA, transfer, purchase a slow cooker while it is on sale, put on cloth napkins. Just on the 30 rich ideas on the list is related to making money. Just one of them is related to making money. The rest is just all about savings and cutting expenses. So that is not the way. That is the opposite. That's using the old rules of money. We cannot do that. 401ks, mutual funds, IRA, all of those are fake assets. It's not putting money into our pocket. If the person has to put money in that every single month, every single week, it's not receiving any money back right now, then it's not an asset, period. And the person might say, well, we don't need it right now. No, yes, you do. We want to have that money coming in right now, because what if we want to take a vacation? We talked about freedom yesterday, right? We talked about building total freedom, being able to do that. Don't make yourself a victim of your own ignorance of financial education. Confront and say, okay, we need to get financial education now so that we can build more passive income and capital gains income so that we can do whatever we like to do without having an excuse that, oh no, I'd rather do this, I'll do that later. No, you want to do it now, okay? Don't tell me that you'd rather go to Paris or go travel around the world or do the things that you love in 30 years from now than do it now. That makes no sense. We have to confront reality and understand how to build wealth and just admit that money is going to be part of us the rest of our lives. So we need to master money. We got to tell money what to do. Money is our slave. The remaining strategies are all methods to reduce costs and downsides, just like Carl and Mindy. If accumulating, and majority of people do that, they just think about saving money. That's all they do. Saving. So they shrink, they live more frugal, they don't give themselves the pleasures that they want. And if they do, they can't really afford them, right? So they have to work extra hard to pay for that. So now they're not even seeing their family like they should. They're spending more time at work with other co-workers. That is not the way to live. At least in our opinion, it's not. It is slavery. You're a slave to somebody else's dreams and company, and now you're chasing the bag, you're chasing the money, something that is dead, something that doesn't have value. We have more value. Our time is more valuable than money. Our time is priceless, okay? If accumulating large savings or holding a well-paying career don't translate into financial freedom, what does? Investing for passive income does. 3 different forms of income. We think it is important to recognize that there are 3 different kinds of income before we respond to our question. Number 1, earned income is the money a person makes if he or she works and get paid for their work. Majority people master this type of income. Someone else owns and controls their time. Capital gains income. This income is one of the type of investment incomes that we can have. There are two types of investment incomes. This is one, capital gains income, as opposed to earned income, which is obtained by trading time for money. Capital gains income is taxed at a lower bracket than earned income. In many instances, we can defer taxes by simply investing the profits into a new cash flowing asset. We must be aware of deadlines and requisites for achieving lowering taxes on our investment profits legally. The next type of income is passive income, and this also comes from investing. This is the second type of income that comes from investing. This is one that we want to focus on because it requires a higher level of financial education. And when we focus on investing for passive income, we're truly building not only financial independence, but we're building total freedom, right? We got to compound that assets column with cash flowing assets or passive income assets. Cash flow is the same thing as passive income, okay? And we want to have that. And then we will have capital gains income, of course. And then earned income, we're not going to have any of it unless you truly want to do that type of job and you want to do that not for the money, but just because you love that field or that task or whatever you want to be or doing as a job. But earned income, we're not going to make because it's taxed at the highest bracket. So as a wealthy entrepreneur and inside investor and a true capitalist, we want to look poor on paper as individuals because therefore we pay zero in taxes. And when we build passive income, then we can lower that company's income taxes to zero. And we can take advantage of all the wealth and keep as much as we can legally to enjoy our lives. Many people believe that, to explain how to make passive income, for example, have our assets generate revenue for us constantly, our wealth strategy or formula is to obtain cash flowing greenhouses. For example, if we're talking about real estate, then trade them for one red hotel. Repeat the steps to achieve passive income through real estate. Passive income is taxed at the lowest bracket of all incomes and it requires a higher level of financial education to achieve it. And we must understand when we're investing into anything, we have to have clear what type of income we're getting, whether it's capital gains income and passive income, how soon, how fast. We need to have all of those dates and place, right? We need to clearly see the entire investment. Many people believe that having a big salary or earned income will make them wealthy. However, as we already stated, jobs can be lost. Furthermore, the exchange our limited time for money is not a good idea because time is limited. Our time should not have a price because it is priceless. Although capital gains income is taxed more heavily than passive income, it is still beneficial because we only profit from sales. As a result, we are dependent on the markets and giving them a large portion of our earnings. It is not a steady source of wealth. So we need to focus on passive income. And then capital gains income is going to come along the way because some assets and different asset classes only produce capital gains income. The sole source of true financial freedom is passive income. It just requires 3 simple steps. As we can see, the 3 types of income: earned income, capital gains income, passive income. Majority of people focus only on earned income, and wealth entrepreneurs and inside investors, we focus on capital gains income and passive income. Specifically, here Master Investor, our commitment and rule number 1 is that we focus on building passive income, right? Because as I mentioned already, it requires higher level of financial education. So we can always realize capital gains income as well because we have the financial knowledge to create passive income. The 3-step process for reaching financial independence. We are financially free by using this approach. This is a formula. 1, we build and purchase cash flowing assets that bring in money, passive income and capital gains income. The positive cash flow from our assets covers our daily and future expenses. We are financially independent once the monthly cash flow from our assets equals or exceeds our monthly living expenses, since our assets are generating passive and capital gains income for us. Those are the 3-step formula that we must follow in order to achieve financial independence. We will be free to work for ourselves once the formula is finished. We'll be financially independent when we don't need to work for earned income because we have passive income and capital gains income flowing into our lives from investments. The practical method for achieving financial independence and freedom, which you all learn how to invest in real estate and the other asset classes that exist today, such as business, crypto, paper assets, real estate, and commodities. Those are the 5 asset classes that exist in order to become financially independent and free. To be honest, we may lack the funds necessary to carry out this. Rather, we pay ourselves before we could create the money. What does this signify? It indicates that we prioritize and treat the investment as our initial outlay of funds. In other words, is our priority expense that we're going to fee money to. Whatever money we have, even if we have creditors or whatever calling us to make payments, we're going to first use the money to invest for passive income so that we can come out of the struggle of paying bad debt, because good debt will take care of bad debt. And there's nothing wrong with having bad debt, because those liabilities are things that maybe we enjoy in our lives. We want a nice car, we want to have a nice mansion, a nice house. Those liabilities are great to have in life, and we can have them for free as long as we build assets that will produce the revenue to pay for them. That way we're not paying ourselves. We're not working at a job to pay for those liabilities. Our business are working hard for us. Makes sense, right? That's a way to do it, not the poor mindset way. Majority of people work their entire life for paying for their car and everything. That's not the way to do it. It's just impossible for a wealthy person to be able to pay for our private jet or whatever we want to have in our life by working hard at a job. That just makes no sense. It's not done that way. It's not done by saving money neither. After paying our investing cost each month, we will then have to figure out how to pay for everything else. It pushes us to become creative. You see, we have to expand and feel uncomfortable as we build our wealth, because if we're not feeling uncomfortable, that means we got to the point where we are not learning anymore. So we have to put ourselves in uncomfortable places so that we continue to grow our spirit, our mindset, our leadership skills, communication skills, and everything that makes a successful business owner and an inside investor. Though it is occasionally nerve-wracking, we always manage to find a solution, and we can become quite skilled at allocating the money in places to grow rapidly. With the money being generated by our investment, it will pay for our liabilities and expenses. When we use the formulas of the ultra wealthy and adopt the way of investing for passive income, then we can obtain anything for free legally by simply building or acquiring a cash flowing asset that will cover for the expense of the liability we want to have in our lives. As a wealthy entrepreneur and inside investor, we have the ability to solve problems via systems. When we do, we can be rewarded with financial freedom, which comes after achieving financial independence. We also reached out to additional resources. For example, we have digital courses and ebooks available to all of us to increase our financial IQ, to ultimately build our assets column, right? It's all about learning something that is going to create passive income and capital gains income and ultimately give us freedom, which we have them being sold daily with systems. To this day, we still receive sizable royalty checks from books. Additionally, Master Investor, our company, provides financial education through books, coaching, seminars, and digital products. Every month, it also puts money in our pockets in the form of passive income. We will never have to work for earned income a day in our lives, because our costs or expenses are fully covered by the cash flow from our assets that we control with our companies. This is not the same as saving or investing in fake assets like 401k, for example. Money can run out in savings and can also be lost in fake assets. No matter what, cash flow is constant and is keen. The value of savings might decrease in relation to inflation. If one is saving, then that money should have a plan to be used for an investment, and that is the reason for the savings. No other reason but to invest. That will be sound savings. That will be something that you're planning to launch your business, launch something that will cost you some of your capital, etc., to get to that point where you at least have your first assets or your savings have a purpose. And a lot of people are saving just to save money because they think in the future they can use it. Okay. But if it is to feel secure by having money in the bank, then the strategy is a losing one for investing. Saving money is losing money. Investing, save money is key to reach financial independence and freedom. Turn your saved money into passive income. But first, of course, get financial education. Value of assets and apply it immediately. Don't take forever. Whatever we're learning today, go ahead and apply. Build passive income. We have the systems and everything available to us in our fingertips. Whoever doesn't want to take action, that's their problem. As long as we're taking action, we're going to get positive results. Value of assets increase in tandem with inflation. We become truly financially independent because of this. As you can see on the diagram, the cash flow circle, we have on the left side of the cash flow circle, the employee and the self-employed. On the right side, we have the business owner and inside investor. Wealth is built on the right side of the cash flow circle, and total freedom is built on the right side of the cash flow circle. On the left side of the cash flow circle, people go for security, which is a fake security. And they also invest in fake assets. They're working for money. They're working every single day. If they don't show up to work, they don't make money. So it's active income, is earned income, and 97% of population thrive on the left side of the cash flow circle. However, they all have the same opportunity to move to the right side of the cash flow circle by beginning to shift our mindset to the wealthy one. Two types of mindset when it comes to money: the poor mindset and wealthy mindset. It's up to us which one we want to choose. Hopefully everyone who is listening to our community here is adopting the wealthy mindset, because that builds freedom and it creates excess of cash flow in our lives where we can actually tap into our passions and thrive through our purpose in life without worrying about paying bills. So focus on building wealth and living on the right side of the cash flow circle, because that's where freedom is found. Our perspective on money. So on the right side, we have the business owner and the inside investor of the cash flow circle. Our perspective on money matters. As we said in the opening of this talk, poor people will often remark they can't afford that. But the one with the wealthy mindset has a very different query. We ask the following: how can we afford that? The wealthy mindset and poor mindset have a very different financial philosophies, primarily on earning versus saving. Poor mindset people, instead of investing, they will be cutting expenses and saving money. But the wealthy mindset always is focused to making investments to enhance our wealth and a standard of living. In other words, spending money and using our money to create more wealth, multiply by acquiring cash flowing assets. Which mindset, in our opinion, a happier and more fulfilling life? It is our wealthy mindset. We say sadly because it is really difficult to witness others' financial struggles, lack of wealth, and extreme billionaires in their later years due to lack of money, never understood the game of money because they lack the time to invest in their financial education due to the fact that they were working at a job their entire life. So one of the main reasons we can say that hinders people from becoming wealthy, financially independent, and financially free is having a job. Unfortunately, ironically as it sounds, is having a job, because it takes all your time away from learning how to make money through sound investing. By the time the person gets home, they don't even want to talk about making money in sound investing, because it's going to require mind power. It's going to be a learning experience, just like they were learning how to do their job at the beginning. So they're tired. They don't want to know anything about money anymore because they think that they did their job and they already work for their money and they're okay and they're satisfied and they're comfortable with that and they feel secure and they feel like investing is too risky. So they usually push investing to the side and they never become wealthy. And by the time they retire, they're just miserable because they now have to lower their standards of living. So we shouldn't live our life like that. It should always be able to increase our standard of living, expand, right? That's how life should be. Always growing, not shrinking. Despite their lifetime of hard work, the financial perspective ultimately proved to be detrimental to them. Money is a very important element to master in this life. We all have, because money does answers all things, and it is a tool to get what we want out of life. As we can see the cash flow pattern of the middle class, usually we find doctors, dentists, attorneys, accountants, and professionals on this class. They still have to work for money, earn income. They lack systems and financial education. So their money goes from their income column down to the liabilities column, and then up to the expenses column to someone else's asset column. They're just like the poor class, except that they have liabilities, and the poor class don't have the credit to get more liabilities. They just have expenses, which at the end, they both end up with no money left. And if they do have money left, they will spend it in more liabilities because they don't know how to invest. Spenders and good debtors win, while savers lose. All of this proves that if we want to be truly wealthy, we need to comprehend the master investor adage that savers are losers, spenders profit, and good debtors profit in today's financial environment, while savers continue to lose out. Of course, by spenders and being good debtors, we mean people who invest in cash flowing assets or utilize our money and OPM, other people's money or debt, to grow our businesses, passive income, and capital gains income. The new rules of money are here, and we must master them to be able to win at this game of money. We can see the majority of people in the world do not experience everything they wish for because they have a problem of lack of money rather than too much money, which comes from the way they make money in their lives, which is through earned income only. Working hard for earned income is not the way to become wealthy and financially independent, and it's also not the way to solve our financial problems. Additionally, we need financial knowledge that extends beyond cost cutting or savings and downside in order to spend intelligently in this manner. We have to know how to make money grow on trees, perhaps, or at least how to build wealth in our own unique way. We all have talents, and today we have the potential to put them in different packages digitally, and we can create assets. And if you have an affinity for a certain topic or an area, then figure out if there's a niche and what solution you will be bringing into that niche that people are wanting right now. And you can see it that they're asking for it because there are competitors, and maybe there's something that we will innovate and that will add something unique and more profound for them, where it will be an easy move from their current provider to us. And also we're going to be capturing new people that are having that problem because we're building a brand. So it's going to spread. We're not just building a company here. We're building a brand that has intrinsic value. We have trademark, we have intellectual property, patents, we have legal paperwork, okay? And we have business integrity, which means that the business is profitable, is creating profit, is creating positive cash flow, okay? And is being able to sustain on its own and grow continuously because we chose a niche that is scalable, that we can leverage and we can impact unlimited people in the world because they either have that problem or we have noticed that they eventually will have that problem. Okay, so we can always expand. So we want to choose businesses that we can always gain new customers in new markets. Additionally, we need financial knowledge every single day to be able to make sound investments as money evolves. We need to prepare for any type of economy. It's not about predicting the economy. Majority of people out there on the internet talking about predicting the market and this and that and watching the market that's having a job. That is not investing. You're trading. And on top of that, they're giving the wrong data to the people. So make sure that everybody here in our community, whoever is listening to this, we go out there and seek the right mentors. And also have a mentor in person. It's important to have someone in person that has already done what we want to do. And they can provide value. Every time we talk to them, we get a twist, as I call it here in our community, right? It's a twist. We all have a twist in our lives and also in our companies that will take us to a next level. And a twist is a sentence that we hear from somebody's perspective that they have already done what we want to do. So it's coming from a true mentor. It's not coming from somebody that is just talking out of theory. Okay, so make sure that our mentors are picked very carefully, okay, wisely. We need to have them properly aligned with our financial goals. Otherwise, we can end up wasting our time with the wrong data. And that's the problem with today, having free data and having access to it. The person can go down their own rabbit hole and end up losing all the money and not really building wealth as they thought they would. Financial education is the answer to avoid all of that, okay? To avoid falling in the trap of the poor mindset. As we can see, the cash flow pattern of the wealthy class is just, they still have to show up for work. They still have to see their clients. And it's just like the poor class. Now, when we look at the cash flow pattern of the wealthy class, we can see that our income comes from our assets column. And in this financial statement, the positive cash flow comes from passive income and capital gains income assets that we control with our companies. And then it flows into our liability column from our income column up the expenses column. And guess what? When we have true financial education, then we can turn our expenses into our assets, because a lot of liabilities on our liability column can be turned into assets. But we need to understand how to do this by acquiring the right financial education. Make sure you click the link in the description so that you join our inner circle. We have 3 ebooks right now: the 10 New Rules of Money, How to Build Cash Flow with the Internet, Turn Passive Income On, and How to Invest in Crypto to Build Wealth, Understanding Bitcoin and Blockchain. And each ebook has turned into a vivid digital course on our website, where we are adding additional assets as we move forward to emphasize on each topic of each volume. And as we move forward, we will add exclusive interviews with different entrepreneurs in different fields, celebrities, and so forth, to emphasize and help us with more valuable tips on that topic on each specific digital course. So as we move forward, when you get in, you'll be grandfathered in for any additional asset after you get in. Okay, no matter if you get in today or tomorrow, whatever time you get in, any other asset that we add after that, then you'll be able to access that asset at no additional cost for life. So imagine when you get in today, it's just a great deal, because in a year, 2, 3 years from now, that same asset that you looked at was a lot less now than it is going to be in a month from now, because we are adding assets constantly. It's a vivid digital course. If you just want the ebook or the paperback, you can go to Amazon or Kindle. We also have them there, but you don't have access to the assets when you get them from there. Just go to our website. If you don't mind having the digital copy, you'll have that, and you can download it straight to your smart device, or you can read it from our virtual office that we will give you when you create your account on our website. So it's very useful to be able to have access to all of the assets that we have it there, because it's catered to help us build financial freedom and financial independence, which comes before financial freedom. So it's going to help us build our wealth successfully. Okay, so just make sure you go out there and get it, and focus on having the cash flow pattern of the wealthy class. Go check out our ebooks and everything that we have available on our website, because it's going to help you with this cash flow pattern. That's the cash flow pattern that we want to adopt. As we can see, is the best one. Money's working for us. We're not working for money, and money's working for us because we have a system of systems. A business is a system of systems. We have multiple systems, right? Multiple businesses in different asset classes, in order to protect ourselves from inflation and hedge. For down economies, we need to invest among the 5 asset classes that exist, right? Number 1, real estate. Number 2, business. Number 3, crypto. Number 4, commodities. Number 5, paper assets. Okay, those are the 5 asset classes that we have available today to invest. I suggest that we start building our businesses, so that the cash flow from our businesses, so building a digital asset, will then be used to invest in other asset classes, such as real estate, and we can use that revenue that we're getting from our digital assets or businesses that we are controlling to invest and buy us other assets. And that's how we compound true wealth. For us, what does financial freedom and independence mean? 3 steps that we took are shown to us. It happened even though it took some time to happen. All we needed was a strategy to create cash flow and the willpower to use the cash flow to pay our bills. We achieve financial independence when our monthly costs are met by our cash flow. But for us, that is the strategy that works. What steps are we taking right now to move towards our financial goals of becoming financially independent? And if you already reached that level of financial independence, then the next step is build financial freedom, which is excess of cash flow, more assets that we are controlling with our companies. Start investing in high quality financial education by reading our financial ebooks. We're working on our 4th ebook. It should be released in the next month or so, and it's going to be also in a priceless book. It's going to be an amazing volume that will change people's life and help everyone understand how to raise capital. The title is How to Raise Capital to Build Wealth, because the job number 1 of a wealthy entrepreneur is to raise capital. And the skill number 1 of a wealthy entrepreneur is to master how to sell without selling using systems. And that is marketing. We're not going to be doing sales 101. We're not going to be knocking on people's door. In fact, everything is going to be done on autopilot. We don't even need to show up our face on any of our ads or businesses if we don't want to. Okay? We can build our digital assets without our face, and hopefully we are building just brands with our name attached to those brands, because we want those brands to be running on themselves. We don't want to attach ourselves unless you want to be like Ralph Lauren or those types of brands that I eventually think they will probably die down. It's not as powerful as Coca-Cola or Apple, because they're going to be here for a long time because they're not attached to a person. Nike, Adidas. Okay, so whenever we build in our wealth, we need to think of all of these things, and we need to future-proof our assets. And the way we do that is by having financial education, doing what we're doing right now, right? Investing in our financial education, being part of our community here at Master Investor, investing in the right mentors. There are great people out there. Just make sure you're not listening to the wrong folks, because they will waste a lot of your time. And sometimes we only get those chances once. It's all about catching early trends while you're working on something that was given to you by the wrong mentor. Other people are winning while you're over there struggling. So make sure that we are aligned with the right mentors, okay? And don't listen to just anybody that talks about money or show you fancy things in the background and so forth. There's nothing wrong with having a lot of rewards and showing them, but make sure that the message is aligned with the wealthy mindset, okay? Because a lot of people that have money doesn't mean that they're wealthy. You don't know how they got it. You don't know anything about it until you do due diligence and you understand the background of that mentor, okay? And understand what is that company all about and if it's aligned with the wealthy mindset. There are 2 types of mindset, like I mentioned earlier, when it comes to money, the poor mindset and the wealthy mindset. Which one is the one that we operate with today is going to determine how wealthy we become in the future and how financially free we are. And of course, it's going to determine whether you're going to be able to reach financially independent. You'll be able to reach that level of not working for money or earn income to pay for your bills. And that is what financial independence is, right? Is to be able to have assets that are producing enough income so that we don't have to work for the bills that we have. So everybody's wealth is different at the end of the day, because not everybody wants the same things. Just figure out the lifestyle that we want, reverse engineer, and make sure that we are investing on our assets column daily. Every time we get a surplus on our businesses or investment, we turn that into an expense of investing. We have a plan for that surplus. We don't treat it as an asset, we treat it as an expense. And that's going to make us ultra wealthy. When you start having that mindset, it's not about looking even wealthy to other people. At the beginning, we might have to use all of our surpluses to invest in assets that will produce more passive income, and eventually we can buy whatever we want. And if you want to show up somewhere with nice clothes and whatever you want to have, it's possible, because we're obtaining it for free, because our business and our investments are paying for that. But don't go around trying to impress other people when it comes to building our wealth. We need to be concentrate. We need to concentrate and laser focus on what we are doing here, because this is serious. Okay, this is something that we must take cautious in building. We don't want to waste a lot of time building something and it gets taken away, right? We need to make sure that we're doing it properly. We have the right foundation. We understand the basics of business and investing. We are linking up with the right people, networking daily, right? I always say, let's go out there and meet people. It will work tremendously for our businesses, because remember, it's all about being the right person, showing up, getting people to like us, know us, and trust us. When they know who we are and they like us and so forth, they're going to do business with us. And we're always closing A, B, C, right? We're always providing value to them. It's not about asking them to buy something for us. It's about showing them value, and then they automatically want what we have, okay? And sometimes we will meet a person that knows somebody that need what we have. And then because they like us, know us, and trust us, be like, hey, you can contact this person because they were asking me about this type of solution that you have. So you see, one person can connect us with other potential customers, even if that person is not a preferred client or it's not someone who needs our solution, but that person knows somebody. So when we connect and we build our networks, then we are connecting with more networks behind those people. Everybody has a network. So when we make a connection with someone, we're now attached to the network as well. And when we attach to those people's networks, then we attach to the network. It's a ripple effect. So building multi-intelligence networks, meaning with different types of people, different groups, different languages, is key to building financial freedom in today's economy. Thank you for listening to another extraordinary talk on money, business, and investing. Make sure you click the link in the description to join our inner circle here at Master Investor. Leave a comment if you need help. Make sure you reach out to us. We're here to empower our community to the next level financially. 2 types of debt: good debt and bad debt. Savers are losers. Good debtors are winners. Let's learn how to utilize debt, or OPM, or the people's money, to invest for passive income. And when we have capital of ours, then we're using that capital to invest for passive income and raise capital, right? So the job number 1 of an inside investor is to multiply money through sound investing. The money that we're getting from loans, from borrowed money, from good debt, and also the money that we're getting on the revenue of our businesses and assets that we are controlling with our companies. Bring you the good and bad news of money, the business principles that work in all economies. Talk to you on the next talk, and thank you again for having me and investing in Master Investors products. Stay extraordinary and wealthy. Bye for now. Perfect. Okay, let me fix some typos. If you have any questions, let me know. Okay, we're almost an hour here on our podcast, and as you know, it only allows us to do an hour. So that's perfect timing anyway. I don't think it should be more than an hour. Sometimes it can be, but we need to feed people's little spoons, okay, of this type of knowledge, because it's really twisting their mind. When somebody that doesn't have the wealthy mindset at all, and they hear this knowledge and this powerful message, they might feel like their entire world got turned upside down, which it does, and that's the point. But we don't want to also make people feel overwhelmed, so we have to do it little by little, and that's what we're doing here inside our community. Thankfully for all of us helping us achieve this as well, right? Our community is spreading the word. Our YouTube channel is growing. And of course, our revenue is growing, which ultimately helps us build more assets inside of our community here at Master Investor for everybody to become wealthy. We're building true leaders, wealthy entrepreneurs, and inside investors, or capitalists, or master investors. What an amazing talk. Amazing. Timeless. This is literally timeless and priceless. Every day We're delivering high quality financial education. We're keeping our promise and fulfilling our mission. Okay, let me post this on our podcast. I'm so happy. Today's talk was amazing. Every day, I make sure that we have the best. Always will. Mm. Okay, let me see here. All right, we're gonna fix this real quick. Okay. All right, so I'm going to go ahead and sign off right now. I'll see you on the next live stream. Thank you for joining me today on this amazing talk on what is financial independence. Subscribe to all of our social media platforms and turn on the notifications so that you know when we go live or upload valuable talk like this one that can literally change our life financially forever. Remember, it's all about understanding the new rules of money, investing for passive income actively. We have to be doing that ourselves, okay? We don't want to give our money away to anybody. The way we build financial independence and freedom is by actively investing for passive income. Bring you the good and bad news of money, the business principles that work in all economies. Stay extraordinary and wealthy. I'll see you inside of our inner circle. Click the link in the description to have access to our digital courses and ebooks and other tools that will help us build true wealth. Bye for now.